Disney got hit once more this week when Charter Communications, a cable company, refused to negotiate for its networks and ESPN. As fewer and fewer people watch linear television, this really hurts Disney because its television networks rely on linear television. And even though Disney does own ESPN and sports are the #1 most watched content on TV, it still suffered this week when Charter refused to negotiate with them. Between its issues with linear television losing popularity, its inability to figure out streaming, and the question mark around ESPN, as well as a big and bloated leveraged balance sheet, Disney continues to suffer as we head forward, and it doesn't look like there's any light at the end of the tunnel yet. I had someone ask me why I don't sell my Disney stock entirely, and here's the reason. First, I've taken all the original capital and profits out of my position, and second, whenever I'm looking at long-term investing, I ask myself, where do I see this company in 20 years? When it comes to Disney, I look at it and I think, will the stock price be higher in 20 years? And since my answer is yes, because of the fact that they've demonstrated they have a track record of succeeding over the past, I am going to hold this one for the long term. That being said, when Disney sold off this week, I did add to it, but I only added from my profits. My buy order went through on Friday where I added 0.76% to this position at $81.62. We're just a few dollars off of Disney's pandemic bottom when the parks and cruise lines were closed. That's how much Disney has come under pressure lately. This buy locked in a 9.47% discount, replacing just a few of the shares that I sold at $90.16 a little over a month ago on July 12th. It also raised my per share cost 64 cents from negative $2.87 to negative $2.23. In my portfolio, a negative per share cost means I've taken all the capital out, in addition to $2.23 per share of the position that's still held. From here, my next buy target isn't until $70.89, above a point of support that Disney hasn't seen for years. But it is so weak right now that I feel if we see a systemic sell-off, the pandemic bottom for Disney won't hold. My next sell target is at $102.54, slightly below resistance that Disney found earlier in 2023, where I will continue to trim profits from this position. As I've said before, Disney is a media powerhouse, and between its parks and its IP, it's got a lot going for it for the long term. However, over the short term, it has a lot of challenges facing it, so it could be down in these levels for quite some time, which is why I'm in no hurry to add all of the profits back into this position. Additionally, it's worth noting, I will not add capital back into my Disney position. I'll put profits in, but no more capital, no matter how low Disney goes from here. If you want to follow along in all the trades of all my portfolios, plus what I'm doing in Bitcoin, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out, and I'll see you in the next video.